You sent us a chart called United States Challenger Job Cuts. What is this telling us?
The Challenger Jobs Report, this is companies letting you know of job cuts they're about to do, or they're announcing job cuts. They haven't fired the people yet. So this is a leading indicator of where job cuts will come, typically a month or 2 months later, depending on severance packages, et cetera. So you can see on this chart, if you're watching online, there's quite a bit of a spike there, right? So now you're well over 250,000 job cuts announced in a month, precluding going. And just as of this morning, Intel just announced 20,000 job cuts, right? So companies are starting to fire people. This has nothing to do with the tariffs. This is the economy was slowing down. We've been talking about it for 2 years. The sell-off in the markets is an excuse base, right? They always look for the excuse to revalue the portfolios to get things into normal market conditions. And again, when the stock market went all the way down to about 5,200 on the S&P 500, that was a pretty big drop. We went below that, but that got it to where it was almost fair value, at least by some metrics, right? And if interest rates continue to drop, then the market's probably getting back to being fairly valued. If interest rates do not drop, then the market will most likely have another leg lower, 10, 12% or so. But job losses are going to mount, and they're going to continue in the near future.
I think you said earlier in the show you think in May Powell and the Fed will make another rate cut.
Yeah, I think they're going to have to, simply because the job numbers that will come out between now and then are going to be sufficient data for them to say, okay, we need to get this going. But now, again, the faster that Trump and them announce deals on tariffs, the faster he'll get the rate cuts. And I think that's also what Scott Bessent, who we talked a lot about this week, has in his ear, saying, listen, if you get the trade deals done, then the inflationary pressure that is being talked about from these tariffs would go away, and you would then have deflation, which we are seeing across the board, right? We've talked about inflation's come down, and Trueflation this past month was at 1.22%. It's a great website, trueflation.com, just no E on true. So TRUinflation.com. And you can look for yourself. And it just prices the goods and services we buy most every day. And it was at 1.22%. So that gives the Fed room to cut rates on the inflation side. So they have two mandates, inflation, right? And then they also have full employment. Well, if job losses mount, as we're talking about, then they're going to want to cut rates to encourage people to hire people. But the other telltale sign, Chip, is the real estate market, which got a little lofty due to all the stimulus checks that people got, and people were working from home. So I don't have to live in San Francisco, so I'm going to move to Austin or whatever, and I'm just getting paid the same amount of money, and I got stimulus checks, I'm flush with cash. Well, I'll buy this house that's overpriced. It doesn't matter. Interest rates were at basically zero back then, and they got these mortgages, and now they're finding out, well, wait a minute, taxes and insurance alone, I can't afford this house, let alone the low mortgage. And so houses are starting to come to the market at an incredibly fast rate. So we're seeing inventory launch not only on the single-family market, but on multifamily as well. Vacancies on apartments, multifamily, are basically at all-time highs now. Normally apartment complexes run with very little vacancy, just 3 or 4%.